Hi, this is the Pim Trader. Let's review what happened in the stock market this past week. Let's start with the NASDAQ 100, the QQQ. The QQQ keeps going up the upward trend line. It has cleared the 50-day moving average. It is finding resistance at the 200-day moving average, which is also close to the peak from March 25th. So both the price of that peak, which is $493.62, and the 200-day moving average will act as resistance. So it's possible that the NASDAQ price may fall toward the downward trend line and try to get back up toward the 200-day. So if we were to project the intersection of this short-term resistance and the upward trend line, we should see the market make a decision whether it wants to break above it or fall below around May 21st. Of course, we may see action sooner than that. As we saw in late April, it was possible it could have happened right at the end of April, but the market decided to make a move 1 week before the end of April. So in summary, we want to see the QQQ get above the 200-day moving average and the nearest peak at $493.62, and we should hopefully see a move higher if that happens. Next is the S&P 500, the SPY. The SPY is also encountering resistance at the 200-day moving average and the peak from March 26. It is following the upward trend line also. So based on where the upward trend line and the most recent peak high, the lines will intersect on May 20th. So it's possible it may take that long for the market to decide whether it wants to move higher or fall below the upward trend line. So in summary, we want to see the SPY get above the 200-day moving average and get above $576.33 before we see a good move upward again. Next is the Dow Jones Industrial Average, the DIA. 2 Fridays ago, we saw the price break above the downward trend line. It tested it on Tuesday by falling slightly below it and then recovered and is now a good price above it, a good ways above it now. When the price did fall on Tuesday, it did bounce off the most recent support, the low from March 13th. So that's a good sign. It still needs $10 before it can get to the 200-day moving average. We may see some resistance based on the Thursday price from the low of Monday, January 13th. So to summarize, we want to see the DIA get above $418.51, which is the most recent resistance, and then shortly after get above the 200-day moving average. Those two things happen, we should see a good move up. Next is the S&P MidCap 400, the MDY. The price has been following the upward trend line since the lows of Monday, April 7th. Still has some room to go before it hits any type of resistance. Most likely the next resistance it may encounter is the high from March 25th, which is at $553.45. Next is the Russell 2000, the IWM. The IWM has also been following the upward trend line since the lows of April 7th. It has quite a ways to go before it encounters resistance. More than likely, the next resistance will be the high price from March 25th, which is at $209.27. Next is gold, the GLD. So gold has hit a peak on April 22nd, and it has been going up and down ever since. It has found support on an upward trend line, so we may see gold going up and down a bit over the coming weeks. Hopefully it holds this upward trend line. So one way to play this is to buy the bounces. So whenever the price hits the upward trend line and goes up the next day, then that's a viable bounce. Next is silver, the SLV. Silver has shown some weakness in the lower half of the buy zone. We had mentioned that in a previous video. So it fell below the 50-day moving average, and then it fell below the buy zone, and then it has since recovered, but on red candle days, which is not a sign of strength. But on Friday, it did finish with a green candle right above the 50-day moving average. So even though it's in the buy zone, it's not the strongest buy. I would suggest waiting for it to stay above above the 50-day moving average to buy, or if it bounces off the bottom of the buy zone, which is around $29.44, or falls slightly below and then recovers, that would be buying a bounce after a dip. Ideally, we should see some strength and we should see the price get above and stay above the 50-day moving average with some green candles. Last on the list is Berkshire Hathaway, the brk.b. So we saw the price fall on earnings on Friday. 2 Fridays ago, they reported earnings, and on Monday, the price fell, partly because of the earnings, but also partly because Warren Buffett has decided to step down. It has held. It hasn't gone further. It has recovered since then, and it's trying to get back above the 50-day moving average line. Given the falls from the peak of April 2nd, we're getting to a point where the old zones are no longer applying. We're going to see how it evolves to see if the previous zones still apply or whether we need to assess new zones, given that maybe it is forming a new base of some sorts. Looks like maybe it's an ascending base. So for those of you that are still interested in buying Berkshire Hathaway, if it can clear the 50-day moving average and stay above it for a few days, then it should be a viable opportunity. Also, if it clears the high of Monday, which is $521.18, showing that it has recovered from the earnings sell-off. And that's it for this week. This is the Pimp Trader.